Attention is the most important leverage in today's society in corporate America now. It doesn't matter how nice your logo is. It doesn't matter how cool your name is. If they don't know who the fuck you are, it's all for nothing. As a business owners, you're the last one to get paid. You're the first one to get there. That money is not yours.
Working hard is the only way to make your business successful. Do you believe that's true?
No. Make everything leverageable. Your systems, your team, your wife or your husband, your cash flow, everything in life. Because everything in life is leverageable.
Is the self-help industry complex, keeping entrepreneurs broke?
Tony Robbins is not going to fix that person. He may get some great motivational, aspirational things to say, but at the end of the day, the person has to do the work to fix their mindset.
So why do most entrepreneurs sabotage their own success before they even get close to their first million?
So I can look at it a couple ways. First, a lot of people like to be $30,000 millionaires. They like to, as soon as they get a little bit of profit, a little bit of cash, they like to go out and spend the money and their profits on frivolous things. Could be designer gear or cars or something like that. And they don't really take that step to use that capital or that net profit to use as leverage to be able to get other things such as expansion, better systems, other assets, stuff like that. So one of the reasons they sabotage it before the first million is that. The other way is not put in the correct system, right? Not put in the system to where they are able to actually work on the business, not in the business. But to be fair, with the society is nowadays, a lot of people just, when they get a little bit of money, they have to go buy something. They got to go spend that money on something and not looking at where that money should be going. And that's kind of what stops people from getting the first million.
So really being Instagram rich, right? Like they just want to just
$30,000 millionaire. I don't want to call it hood rich, but it's $30,000 millionaire lifestyle. That's what it is.
No, I agree. I think that as people are growing, instead of them focusing on taking that money or that growth and expanding on it, they're just excited to get to that first level that they just don't continue to move on forward.
Yeah. I mean, they get excited, but at the end of the day, when you take that step to own that business and you're reaching the goals and you have a plan, you should have that plan in place. That plan shouldn't include taking everybody out to the bar or the club or whatever it is. That plan shouldn't include going to buy a $300 belt for some reason. And I mean, that doesn't help you. I mean, that belt doesn't provide cash flow, right? That belt doesn't fix your systems. That belt, you can't leverage for shit, right? So I feel like these people, and especially this maybe younger generation, they look at things a little bit different, right? They see all this flashy stuff on social media. So the first thing is to go out and buy the flashy stuff so they can be like these people who probably those cars belong to them anyways. So they're not taking their money and doing what they're supposed to, put it in their systems, put it in their team, put it back into their business where it's going to help it grow.
But I think it also has to do with like pressure, right? So like as soon as you own a business, a lot of people think that you should have a certain lifestyle, like live in a different world. And I can see where that comes from. I mean, I think it really comes from social media, but I also think that like when you say you own a business, people just expect you like
to have,
fork the bill, right? Like,
listen, when people, you can see it before.
Very frustrating.
You're a business owner. Okay. So you got this, right? Oh, so you're rich. They automatically assume that we're wealthy or beyond our dreams. They have no idea the struggles that we put in, right? Because they're in their 9 to 5, they're in their comfortable ability, but they don't understand all the risks. Because at the end of the day, as a business owners, you're the last one to get paid. You're the last one to go home. You're the first one to get there, right? People don't understand that you aren't, if done right, that money is not yours. That money still belongs to the business until you get to a certain point.
Right.
And your first million, I mean, that's just barely, I mean, revenue wise, that's barely $100,000 a month.
Right.
I mean, nowadays, $1 million ain't shit.
Right. It's not a lot. And I guess a lot of people don't realize the expense of doing business, right? So like they think, oh, your business is $1 million. Yes, but there's a gap between the money that you need to invest back into your business, the money that it costs to do business, and all the expenses, and then like payroll and all these other things, and then the money that comes back to you.
The other way they sabotage is they feel like they have to have all this overhead. right?
Oh my God, yes.
So they have to have all these people that are unnecessary. We've had a business owner like that before.
We've had several business owners like that. Yeah.
One, he was paying, his, main person who was there from his day one. And then he was paying what we believe to be a side chick, right? A payroll.
Don't be messy.
I mean, we weren't sure we weren't sure what he did, but her payroll was just unneeded, and he was struggling with his overhead. And we found one of the reasons why is because his payroll had issues.
Right, but like, to be fair, the day one person, she was very useful to the business.
I mean, she was there she knew everything.
Correct. The other person, I still don't know what they did. I still, to this day, I'm not really sure what they were doing to help the business.
Maybe they're helping the business owner, and maybe,
are they though?
Not really. But yeah, the other thing is his overhead. They get too many bills. They feel like they need to build everything really fast before the systems are in place.
Right.
Your first expense should be, in my mind, whenever you start a business, is putting the system in place, right? Because no matter how many people you have, no matter how badass your sales team is, like how many closers you have, if your system is broken, your business is broken.
Well, not to mention, like, sometimes if you have a good system, you need less people.
Yes.
Right? Because if you have a good system, then you need less people to be efficient.
And then nowadays, so go ahead.
So ultimately, like, sometimes when I talk to business owners, I'm like, yes, this person does this person does that, but those tasks can be combined if you use this system. Like, then you invest in that system, but then you don't have to continue to pay that payroll.
And a lot of stuff nowadays can be automated. Like, right. For the most part, I mean, unfortunately for, the Indians out there, that some of these jobs are becoming, just not needed, or not necessarily not needed, but can be done with an automation or a robot or an AI or whatever it is. And people, that's why, things are just evolving. You don't have to have a whole bunch of people in your office to do things. Now, I'm an old school believer. I love the phone call, love the interaction, contact, stuff like that. But as for your system to make sure that flows, like, this automation is one of the best things ever invented, because it just makes things just smoother for you.
Right. But I think to your point, like your example of the Chiefs versus like your followers, like, there's definitely, you can reduce your team, but you just don't eliminate it. Right. Like, sure. I think I've seen business owners that try to completely eliminate the human touch. And then I just get, like, I've called several offices, like, especially in the medical field. And then I never talk to a person. That's very frustrating. I just don't want to do business with them. But there is a happy medium where you're able to implement good systems, maybe get a lot of that AI to take care of some of the
SMS, email,
right,
stuff like that, the marketing part of it.
Correct. And then have someone overlooking it to make sure that everything is going, so that you still need that human touch. I just think there is a world where people just have to continue to grow with the times, right? Like, yep. You can't just keep
on evolving.
Right.
Right. I mean, people have to understand that technology is taking over.
Correct.
Right. But you also have to look at your demographics. And what I say is this: some of the older generation, right? They, although understandably know that automations are important, they're still very old school, right? So that handshake, one-on-one contact, that human interaction, that's important to them. There's very few, although we see them on social media, these millionaire, overnight wealthy billionaires, right? In their 20s, stuff like that. They're there, but they're very few and far between. Look at the old school wealth. These people are used to the handshakes. They're used to people like talking one-on-one, right? They're not used to doing business with automated machine. How many people that have we got messages? Is this AI? Whatever. Right. They don't like that. They want to talk to somebody.
Correct.
So
again, a healthy amount of automation that still helps you run your business without so much overhead, but still definitely there's importance in having the right people in place. Absolutely. So what is the real difference between someone who quits the 2-year mark and someone who breaks through? Is it mindset or strategy?
By year 2, your strategy should be in place. You should have your system. The only thing at this point, you're evolving it, right? Making sure it's keeping up with the times. Your mindset is the most important thing, because you have to have a level of obsession that you get to be that psychopath, right? to be able to know to push through that level, that second year, right? To know that everything at this point, now you have to be completely obsessed with your craft, not your business. At this point, it's your craft, right? How are you going to grow this? How are you going to evolve? How are you going to innovate it? How are you going to be better than the next person over here? Because they always say most of the businesses fail within the first 2 years, right?
Correct.
So now you're breaking that rule. Now you're in that 2, 3, 4 years. You're in that true established business, right? So how are you going to get there while everybody else around you is evolving? You just have to be completely obsessed in your mind, right? Like I said, I'm a firm believer, to get to the top, you have to be a psychopath. You have to sacrifice so much to get to where you want to go. And by year 2, I mean, your systems better be in place.
Right.
If not, then I'm surprised you made it to that point.
Correct.
For sure. But your mindset is the most important thing.
I also think that like you hit on a really important point, is like you're talking about like being better than everyone else. Like I know anytime that I was in charge of something, I was comparing myself to myself every single time. Like I was so obsessed with what I was doing. I wanted to beat myself. Like I wanted to be better than me. And not so much like, yes, I obviously spoke to other people that were doing something similar as I was doing, just to get a fresh perspective or maybe, problem solve something. But I always ultimately didn't compare myself in like a traditional way to them. I wanted to always be better than me.
At year 2, your mindset is that nobody's better than you, that you are the best. Just like you said, me versus me.
Right.
If I find somebody that is doing something that gives them an edge over me, I may tap into that brain to find out what that is. And then I'm going to take that and I'm going to 10x it. Right. At that point, you have to have that fucked upness, knowing that there is nobody better than me. I am the best.
Right.
In my industry and whatever else I touch. So that's where you have to kind of be. I mean, that's not where you have to be. That is the place you need to be. Because if you don't have that mindset, then 3, 4, and 5, you know what I'm saying? It's going to be a little bit harder. You have to know in your mind that nothing is going to get in your way.
I also think that people get bored, right? Like doing the same thing for so many years gets redundant, or it can be redundant, right?
That's where evolution, that's where the innovation comes from.
Right.
Right. That's where adding extra sources of revenue into your business. That's where working at year 2, you should be working on the business, right? Not in the business. If you're year 2, you're working in the business right now, you're still on a 9-to-5 job, right? You might as well go ahead and hang it up, go ahead and go back to Costco, put that little vest on and start showing people around to where the right aisle is. But at year 2, you need working on the business. At this point, we're trying to find other ways to bring more revenue into the business and how to expand, right? How to go more maybe statewide, maybe extra locations, other ways to bring in cash flowing revenue, or start looking at the next project or the next business that you're going to acquire. So, I mean, you just need to know at year 2, like if you're not working on the business, you're still in there doing managed day-to-day tasks, as I have been guilty of before. You know what I'm saying? You're not there.
Right. So what you're saying is you need to either master your craft.
Yes.
And then once you master your craft, you need to evolve your craft, whether it be by adding services or just a whole new business altogether.
We talked about the 3 tiers of business owners last time.
Correct.
The low level tier, the guy who watches the clock, worry about payroll, stuff like that. That right there, you know what I'm saying? That person right there, like if you were that person, if you were that business owner, you need to go ahead and hang it up. It's over. You need to be on top of everything. When you go into business, you decide to be a business owner, entrepreneurship, in your mind, you have to be ready that this is your craft, right? Don't start something that you feel like you can get bored on in 2, 3 years. You just wasted 2 years of your time.
Right.
Right. You better go in knowing that this is my shit, and I'm going to take this and I'm going to make this the most powerful, wealthiest, strongest business in the world. And then you move on to the next one. Right. So don't ever go into business being like, well, I'm going to get bored. If you get bored anytime in your business, you're doing something wrong, because there's plenty of shit to do.
Right. Is discipline overrated, what actually separates the top 1% when motivation and hard work are not enough?
So the one thing, discipline is not overrated. Discipline is a necessity, right? You have to be disciplined in what you do, especially if you're focused on the business, right? You got to be disciplined to be able to want to grow it. And you got to have that mindset again to be in that framework where this is going to happen. You're going to structure your business. You have your goals, stuff like that. To reach your goals, you have to have discipline, right? But the reason why motivation and hard work aren't enough, and what separates the 1% from everybody else, is because they know how to leverage, right? Discipline is important, but leverage is the most important thing, right? But you have to be disciplined in your day to day, discipline in your goals to be able to have leverage in your business or other cash flowing assets to be able to use.
Right. Because it's just, I don't think it's just one particular quality in a business owner that makes them successful. So what you're saying is you need a combination of everything in order to get to that place.
Yeah. I mean, you can be the most disciplined person in the world, right? But if you have no motivation or you have no ambition, let me use that word. You can be the most disciplined person in the world, but if you have no ambition, it's all for nothing. There's different factors when it comes to being a entrepreneur and business owner to reach the goals we want to reach, right? Discipline is one of them, right? Motivation, yes, but I look at more as the word ambition. Ambition is the most important thing, right? Then there's the obsession. So these are the other things that you have to look at, and you have to know that you have to be ready for and prepare for in your mind, just like understanding that failure is going to happen, and to prepare for it mentally.
So speaking of failure, fear of failure is stopping more entrepreneurs than lack of funding. How do you rewire that in real time?
Quit being a bitch. Look, failure is going to happen. You have to understand that. Everybody who's successful, everybody who rose to the top, everybody who has a wealthy, established business has experienced some kind of failure in their life, right? Failure is a necessity as to grow as a human being, as an entrepreneur, or anything in life. So quit being a bitch. Tell yourself that failure is going to happen. Accept it, right? If you surround yourself with the right people, failure isn't so hard. You would have, the right people to help you when you do fail, right? Because understand that even if you've been doing great this whole time, something's going to happen.
Right.
It is going to happen. I was watching something the other day that Donald Trump put himself $900 million in debt, right? But then he turned it around and became a multi-billionaire. And he still had debt on top of that he leveraged to build his hotels and his other assets and stuff like that. So he set a goal. He was disciplined in getting there. He had that fucked upness in his head, right? But he knew that failure wasn't going to define him. So letting the fear of failure control you is just making you weak. Stop being weak. Understand it's part of the process. It may kick you in the nuts and you may be down for a day or two, right? But you got to get the fuck back up. Because if you don't, what's your other choice? Just let all your hard work go to waste?
I think that some people, when they fail X amount of times, they're like, okay, it's time to do something else, or it's time to do, like, I don't think they believe in their craft or themselves enough to keep failing until they're successful. And I think that's the problem, because I know I can fail 1,000 times and still I'm going to get up again against everyone else's wisdom and just keep doing it.
Against all odds.
Right. Just even other people are like, oh, that's crazy. But that's what you have to be. You have to understand that even when you fail, you're going to eventually succeed.
Yep.
Because I think if any of us would have listened to people when we began, like, we wouldn't be where we're at. Like, I know how many people like have beat the odds and still been successful. I think those are the people that we use as examples. Like, I don't think anyone talks about someone that had an easy trajectory and they were successful.
I don't think there's anybody. I don't think there's no such thing. I mean, everybody stumbled and failed. Everybody. We look at 50 Cent's life. He's how successful he is now. He struggled in the middle of his career and stuff like that, and he took that failure and he took it around and turned it into a multi-billion-dollar empire. So it's just all a matter of your mindset and how to accept it. Get that bitch out of you.
Why do high performers keep quitting on great companies? I love this question. And why does it expose about the leadership at the top?
So when you put, it's like chess, right? You know, there's rooks, there's knights, there's pawns, there's kings, there's queens, right? And it's how you move these pieces on the chess that make you successful in winning the game, right?
For your strategy.
For your strategy, right? When you start putting people in the wrong lane, in their wrong lane, you start putting people like you put the IT guy in sales. Like,
terrible idea.
His lane is IT.
Right.
He's brilliant at it. And you're going to put him in sales. Why? Because he's knowledgeable about the product. That doesn't mean he knows how to sell.
Right.
Right. So when you start putting people in the wrong places, right, what happens is these people start not caring about what they're doing. And instead of it's becoming a craft or it's something that motivates them, it's becoming a job. And when somebody's got to do a job, like sit behind a cubicle doing the same shit over and over and over again and not being able to grow, having that ceiling, you're going to lose not only that person, but that ability to take that person in the respective field or their lane and to help your grow in that business go quicker.
Right.
Because you just mismanage your people.
Right. I think a lot of people in a leadership position, one, don't understand how to leverage their team.
Yep.
But I think it also has to do with, or what do you think about when I say, I guess what I'm asking is, what about those people, those leaders that are mismanaging their team in the sense of like giving them a ceiling or capping them?
I mean, they're handing their people the wrong way. Like, I want to see growth out of my team. In fact, I'd said this before, nothing makes me happier seeing somebody who's so good at what they do within our team go off and start their own thing, right? Because that showed me that, one, I was able to help that person grow to become a business owner, entrepreneur. I helped him get over that fear of actually doing it. And I was able to optimize that person to be able to put himself in a position to where now he can become wealthy and he can have these benefits, stuff like that,
right,
because he deserved it. Because we put these people in the right place and we allow them to grow the way they're supposed to grow. No one should have a ceiling. I don't believe anybody should have a ceiling, right? Your ceiling in business as a business owner is the ceiling you put on yourself, but in regards to your team, the ceiling is what the business owner puts on that person.
Right.
Right. And if they're putting ceilings on the business, on the people on their team and not allowing them to grow, you are not going to get substantial effort and you're not going to get what you want out of that person.
Right. I also think that comes with like, that's another form of fear. Like, I think a lot of people in leadership are scared to not be the smartest person in the room, to not have all the answers. And I think that's such a dangerous thing because when you are in a leadership role, at least when I'm in a leadership role, I want my team to be smarter than me in the areas that I don't feel like I'm the expert in. Like, I don't want to be the smartest person in IT. Like, I do not, because that is a very dangerous place to live.
Right.
As it pertains to me. Or like, for example, my friends, I have friends that are very, very smart in other areas and we sort of fill in the gaps together. And I think that as we're building teams, I think a lot of entrepreneurs, they feel like they should be the end all be all. So sometimes when they're picking out their team, they're not looking for the best person. They're probably looking for the most yes man or yes person. And I think that that's very dangerous.
I hate yes people. I want people to tell me if I'm fucking up, right? I want people to know that catch me on my shit. You're slipping today.
Right.
So I look at this also as we talk about chess, right? So on a chessboard, the king is essentially the most powerful piece because it's the one that you have to capture to make checkmate. But it has besides a pawn, it has the least amount of movements. It can only go one up, one over, one over. It can't go very far. But the queen, the rook, the knight, the bishop, they can move all these spaces and they can do all these different lateral moves, right? So the king, although he can't move a lot of spaces, he is the architect of everything else. You are making these people move in the right spots to be able to get the checkmate to be on the other side, which makes you putting the people in the right way and successful. If you move the people the right way, put them in the right position, and you get checkmate every single time.
So that brings me to one other thing that I've always thought about in leadership. It's like, really, how do you inspire your team to have all that leeway, to be able to move all those spots and to really open up the doors for you, right? Like, you inspiring people as a leader, as the person that's in charge, so to speak. I think it's very important that they're able to feel empowered to come to you and say, hey, I have this idea.
Right. That idea may be the change. You go from, $2 million a year to $10 million a year, just because of that simple idea. You always take a meeting too, by the way. You know what I'm saying? They say you want to talk to you about something, you always listen. You never know how that much of a game changer that can be.
Right. Because I can think of many times where I was working somewhere that I just wouldn't say anything because I knew that person in charge didn't want to hear me. Right. So then I would just let them struggle, even though I had the answer. Yep. It was just easier for me to just not say anything and watch them struggle than for me to say, hey, this is how it's going to fix. Yep. Because then the repercussions from that comment could just, be worse. So what is the first thing a bank looks for before they hand you capital? And why are most entrepreneurs getting it wrong from the start?
The very first thing when you submit an application to a bank is they're going to look at the global financial outlook, your DSCR, right? Can you handle the loan? Is your business capable to cover that debt, right? So they look at your DSCR score, right? They take the certain factors in your business to create the number to make sure you're fundable. What business owners are getting wrong is that they don't understand two things. One, they don't understand how to manage your cash flow. They look at the gross revenue as success when they should look at your net profit.
Correct.
Right? How much overhead do you have? How much is your burn rate? How much are you paying yourself? What are the things that you can do to minimize the exposure and the risk in your business, right? Because nobody's going to give you a loan if you're making $100,000 a year and you're putting out, or $100,000 a month and you're putting out $100,001. How that's possible, I have no fucking idea. But we've seen it before. We've seen it, right? So how is that possible? What bank is going to give you any kind of money if you can't service that debt? So the first thing to look at is your global outlook, your global financial picture, your DSCR score. Once they look at that and they feel like you can service the debt, then they go on the next part, right? But people's financials are messed up. Their cash flow is bad. Their overhead's terrible, and their accountant is trash, right? People don't understand that you can do your taxes instead of showing a massive loss because you don't want to pay those people with the 3 letters in the back of the jacket, right?
Right.
You want to, you can actually show somewhat of a profit or even break even, but use your net add backs, right? Your amortization, your interest, your owner's compensation, depreciation to put that number back up, because these are numbers they put back into your bottom net profit to make the business more profitable, to increase your chances to get approved on a loan.
And I'm glad that you said something about accounting, because I've personally interviewed several accountants that don't understand net add backs. Like, I literally asked the question, and I don't do accounting. Like, it's not my gig, or my lane. But I do understand, obviously the importance of net add backs. And I literally asked someone that's been doing it, I think 30 years, 20, whatever it was, too long not to know what net add backs were. And I was just baffled. Like, I'm sorry, you do this every day.
Those are what we call lender gems, if you will, right? Those are the things that people don't understand, that the banks use those numbers to show your business to be more profitable, right? So when an accountant doesn't maximize or optimize those things on your tax returns, when you go to get an SBA loan or you go get a large loan and say, see, you showed a massive loss. Well, you just showed a massive loss. You have no net add backs. You don't have anything to put back in there. So if you're showing a loss, how are we going to give you a loan for even $50,000 if you're showing a loss?
Right. Like, the math does not math.
The math is not math.
And to me, that's even more alarming when your team, your accountant, like you're going to someone thinking that they're the expert.
Yep.
They have no idea how they're damaging your business.
Yep.
Walk me through how someone with no credit history and no collateral actually gets funded in 2026.
Having great revenue. And when I say revenue, not just your gross revenue, your net profit.
Correct.
Right? Being able to structure your cash flow the right way is the only way to do it with no credit and no collateral. right? Even if you had collateral, if you don't have the ability to pay back the loan, your collateral means nothing. Just because you have a brand new house and you paid cash for it for whatever reason, or you have a commercial building that you have with no mortgage on it. If you don't have any cash flow or revenue going into the business to pay back that loan, nobody's going to collateralize it because you don't have a way to pay back that loan.
Right.
So even having collateral with no revenue, it doesn't really matter. So there's two ways to get funding: your credit or revenue. So if your credit isn't built up enough for whatever reason, you're going to look heavily on your revenue. Now, when it comes to certain institutions and banks, your credit will take a factor into it. So
Right.
don't think you're going to walk into Chase with great revenue and bad credit or no credit and think it's going to happen, because it's not. Because they want to look at your business financial trade lines. They're going to look at your personal, and they're going to look how you build out your business and how you have taken care of other funding that you've had successfully, how much other lenders have given you, to see kind of, how much they've extended you, so they know kind of your threshold before they give you any money. So when you look at revenue, you're looking at different kind of alternative lending systems. But either way, it still gives you the cash you need to be able to, if you have a plan, grow the business the right way or put it towards what you want to put it towards.
What's the difference between good debt and bad debt? And why are most entrepreneurs using the wrong kind to grow?
So the difference between good debt and bad debt is simple. So first, the bad debt. There's two different types. The first bad debt is the $30,000 millionaire, right? You go out and overextend yourself with the bullshit, the clothes, the cars, stuff like that. The other bad debt is whenever you go get and leverage your business or leverage whatever you do to get other people's money or bank lending, and you don't have a plan, right? You just go out, and we hear this all the time. How much money do you need to acquire? How much money are you looking to acquire? Max me out. Okay. That doesn't tell me you have a plan.
Right.
That means you just want a whole bunch of money for whatever it is, right? If you have a plan, you know that number. You know what that number goes into. You know what systems or what expansion or what whatever it is in the business that you're putting that money into, because that plan says, if I put $50,000 here, or I put 25 here, 25 here, it's going to give me X ROI, right? If you don't have a plan, that bad debt, you're going to get it, and you're going to end up just blowing it and spending it and never really putting towards what you know it has. The good debt is just that. It's what you leverage to be able to put towards your business that's going to increase your ROI, or however you lose, or you use that debt to leverage other cash flowing assets, right? That's good debt. Debt is a huge weapon, but if it's used the wrong way, you're going to put yourself in a horrible position to where you can't get out of. And all you're going to have is a whole bunch of fake Versace shirts on the floor.
SBA loans, seller financing, private capital. Which funding vehicle should a first-time buyer actually start with?
So you really can't have one without the other. Private capital or private capital, I'd probably put at the bottom, because you want to try to avoid having anybody taking equity of your business, right? Seller finance is the best. I mean, being able to make an agreement with the seller and the seller finance obviously is a way to get into a cash flowing business or buy asset without having to come out of pocket any money. SBA, and that usually only goes to about 20%, right? Unless you find somebody a little bit different, but the SBA closes the gap, right? Now everybody's going to tell me, well, what if the SBA loans are so hard to get? Well, first of all, with us, we have 86% approval rate. But if the beta of the business that you're acquiring is on point, right? If it's a cash flowing positive asset, right?
Right.
If you have these things in place, and you're there, because obviously you better do your due diligence before you buy that business. If these things are in place, then the SBA loan should be a no-brainer, right? Pick the first. You also got to pick the right industry. Don't go buy a trucking fucking company and think that you're going to go get SBA loan, right? Make sure you do your due diligence on what the SBA is funding. Medical, these boring businesses, the storage units, the stuff like that, the car washes, the laundromats, and go out and find, especially for your first one, something that's easy to manage as well, right? And that way you can use both seller finance and SBA loan together, combined, because you really aren't going to find many sellers who are going to 100% seller finance.
Right.
You're going to have that one without the other. And like I said, private equity or private capital would be last, because you want to try to make sure you avoid having anybody have percentage or equity into your business. You want to especially your first one, you want to do it on your own.
What is the top reason banks reject business funding applications, and how do you flip each one in your favor?
Because they got too many people cash apping their baby mama out of their bank account. Okay.
Serious note.
The reason why people are getting their business funding applications denied is because they're not taking care of the two most important things of being a business owner: your credit and your revenue.
Okay.
Right. When they look at your application, they pull your credit, and you have a $30 late pay from your water bill, right? If you can't pay a $30 bill or a minimum payment on your $300 Capital One credit card, then why would they send you any kind of money?
Right.
Okay. If you were able to get a business credit card and you maxed it out and you're paying minimum payments for the last year, right? Your business is obviously not doing a revenue to be able to pay that down, to be able to use that for other things, right? Now you're carrying the wrong kind of debt again. Then when you look at your revenue, and again, your overhead's too high, you're spending the wrong things, your systems aren't in place, they're just going to shut it down. And they're not going to take, it isn't going to take long. They'll, they're going to look at the first thing, and then they're going to look at the second. But the first thing doesn't work, they won't even go to the second.
Right.
Right.
Why would they?
Why would they? They already know you can't pay your water bill on time, right? Your $300 Capital One credit card is 60 days behind, and your minimum payment is $10, right? So these are the things that why banks are declining applications. Everybody says, relationships, stuff like that. But I mean, you have to be built if you're owning a business, you have to be able to go out and be able to get a line of credit. You need to be able to go get other capital to be able to grow your business at any time you need to. Because these are the important things as you grow. You don't realize it, but your business may blow up, right? And you weren't prepared for this, right? So you need to go out and be able to handle that, to build that, to fix that system, right? Because if it blows up, the system's going to blow with it, right? So you need to be able to get the capital you need to fix that, bring other team members, payroll, whatever it is. And if you're not on point with everything, then you're just really blowing smoke up your ass and just waste time.
I think you also brought up a great point. Like, I see a lot of business owners that they wait until something malfunctions before they start looking for these lines of credit, or they start looking for other people's money, right? They wait until,
there's a problem.
So like, it's like on a seasonal business, they wait until like it's a winter month when they're a summer business to start instead of preparing ahead.
Correct.
And I think that is their biggest issue, because if I'm always looking ahead, right? Like projected. If I know I'm a seasonal business and I know I'm going to need during the winter months, if I'm a summer business during the winter months, I'm going to need capital to continue to, just to make it through that, to weather that storm, so to speak, then why not do it when my business is booming so I can get the best approval?
Because you may not get any approval if you wait till your down season. They may look at the decline in revenue and be like, look, no, you have to.
Well, that's what happens. They look at the decline revenue. They're like, well, you can't pay us back. But if you do it when you're doing well, like I mean, not long ago, I spoke to a business owner that, we were, doing $15 million for the last 7 years, and we've had a decline. And I just like, why didn't you look for, like, that's when you want to build those trade lines and build that business credit when you're doing well, not when you're struggling.
Correct.
Because then you have no leverage or advantage.
You gotta prepare. It's quiet before the storm.
Right. Okay. So if you had to explain OPM to someone who's never heard of it, what's the one analogy that makes it click instantly?
The bank's money. Like it not using your own money. It's using other people's money. That doesn't mean like go rob somebody, right? That doesn't mean you go borrow some money from your uncle or your mom or something like that. That means go use the banks, what they're built for. They were built to loan money to people and businesses to be able to use for different factors. They get money off the interest rate that they give you, right? A lot of people think that for whatever reason, that banks are just out to get them, right? They keep telling me no. They don't like the color of my skin. They are being biased for whatever reason. My time in business isn't long enough. Well, I can tell you, having a lending platform like ours, like there's an answer for everything.
Right.
Right. But you also got to bring something to the table, right? You can't just expect a lender or a bank or whichever big, small alternative lending to give you money if you aren't coming to the table with something to offer. That means credit, good net profit, good cash flow, right? And having a financially structured business and be personally structured the right way, right? You can't go with, bad credit and, no revenue and be like, well, I need money. Well, okay. Then. So there's a whole bunch of other businesses that aren't getting shit together, right? So it's simple. Other people's money is just the bank's money. It's leverage.
The way I look at it, like, and what always resonated to me is you once said that, like, you're letting them take the risk.
Yes.
Why you take the risk on your savings when you can just let them carry the risk? If your business profile is built in such a way, you've done your due diligence, you've made the plans, you've worked hard, you're sharing that risk with them.
Correct.
And it's a mutual benefit, but you benefit more, obviously.
100%.
So it just makes sense.
That's why people always, well, what's interest rate? What the fuck does the amount of interest rate is? I was like, if you have a plan, like if I need $100,000 for my business and I know that $100,000 is going to get me, is going to 5x my business in 6 months, right? I know whatever terms and rates that they're giving me, I'm okay with it because I know that I'm going to be able to pay that off with my plan and well before the time they need it. So I'm not worried about these interest rates and stuff like that. Yes, I may pay a little bit more, but of course, no prepayment penalty, pay it off quicker. You don't have to pay that interest, right? I just need the money, right? Because I have a plan for that money.
But I think when people say that, it's because I've heard people say that don't even understand what their profit margin is. So again, the fact that they understand interest is
and don't come with me asking what the interest rate is with a 500 credit score either. I don't want to hear that shit.
What is the most powerful form of leverage most entrepreneurs have access to right now that they're completely ignoring?
Attention. Attention is the most powerful piece of leverage right now. I mean, look at it. I mean, you can't go anywhere without. We've had this thing. We walk to the mall. Everybody's on their phone, right? I go to the living room. You and the whole family are on the phone. Same watching TV's on. Y'all are all on your phones. Attention is the most important leverage in today's society in corporate America now. Because it doesn't matter how nice your logo is. It doesn't matter how cool your name is, right? If they don't know who the fuck you are, it's all for nothing.
So it's funny because I can think of 3 different types of businesses that in Instagram and TikTok that have nothing to do, like the reason that they're famous has nothing to do with their business. There's a real estate agent. She remakes songs to fit real estate like lyrics.
Uh-huh.
That doesn't make her a good salesperson. That doesn't make her a great real estate agent, but she sure sells popular. There's I guess it's like a lawn mowing. What are those? Landscaping business. They have they have my I used to say my people. They have their landscaping team doing dance routines. I don't know if they can veg or create a beautiful garden, but they're super famous. Like I believe they just hit over 1 million followers like last week.
And those 1 million followers, all of them need landscaping.
Yes.
They all need landscaping. And
then there's a lawyer that got popular because she kind of like she was telling a story about a client, like a situation that tends to be common. And she got really, really popular because of like the tea she was spilling, right? But it has nothing to do with her ability to be a lawyer, which obviously by me following her, she sounds like she would be fantastic. But nonetheless, none of these people have proven their ability to do their job. They're just good at getting that attention. And now everyone, like if I think of a landscaping team and if they were in my area, I'd probably hire them because they're familiar. Do I know if they can do a good job? No. But they're relatable.
Nobody cares about the songs you sing or the how good you act or how good you are at your craft. Nobody cares about anything if they don't know who you are.
Right. At what point should an entrepreneur stop using their own money to grow? And what does the transition actually look like?
So you should stop using your own money like today. If you're watching this, like if you're still using your own capital, it's not sustainable. Right. So the answer is immediately. Now, can you immediately go out and get other people's money or go get bank funding? No, because you may not be structured that way, but you need to find a way to structure your business and you need to figure it out or go ask some questions or hire us. to be able to structure your business and make it fundable, because growing, scaling, innovating, evolving, using different leverages to get attention, all those things right there, you are going to need money for that. And if you use your own money and something happens, a failure of some type happens, and you just use all your capital, right, as opposed to going to get a loan or going to get a line of credit to be able to put towards these things you need to put it towards, it's going to put you in a vulnerable position, right? If you're going to find marketing or find other ways to bring revenue during your seasonal time, right? Your down season, right? So if you don't start doing that now, and if your business isn't fundable, you don't find a way to make it fundable and structure yourself the right way, like, everybody can get their credit fixed. Everybody can fix their business. There's a way to lower your overhead.
Right.
There's a system for every business, right? There's no like hidden secret, or it's not like, Jeff Bezos did this a certain way that nobody else can do it, or Elon Musk did this a certain way that nobody else can do it. They just built the system. They built the right team, right? Everybody can do this, but they did it without using their own capital. They did it by using other people's money, right? So understanding that that tool, that leverage is so important to be able to really grow your business. But if you're not there yet, you need to wake the fuck up and start doing what you have to do to get there.
Agree. 100%. How did the banks and the elite use other people's money to build wealth? And why isn't this taught in any business school?
They're using other people's money. They're using it as leverage.
Right.
So right now, it would be in my ranking number 2 as the most important leverage. It would be 1A, 1B with attention, right? Because at the end of the day, like, the attention that you need, you got to put yourself, you got to post, you got to edit, you got to, you have to build the system, because you can go get the attention, but your system's not ready. Then when the attention comes, and you're
right.
You're fucked. So you are other people's money, and getting that leverage is the most important thing. So what they do is they go out and they take that again. I just feel like this is redundant, right? They go get the money, they put it in their system, they put it in the places of the business. Then they start working on the business. When they start working on the business, then they find other ways to use other people's money to grow more revenue into the business. If it's extra subscriptions, if it's a different form of service, if it's a different product, whatever it is, then they go and they buy other cash flowing assets, right? They go buy different businesses, so they expand their portfolio, and then they're bringing more money in. So that's how they leverage it, right? Why they don't teach it in business school? Well, it's like the difference between business school is like book smarts, right? They're going to teach you how to color by numbers, right? They're going to teach you how to, put the right shape into the right, the triangle in the triangle and the circle in the circle. Right. Leveraging other people's money, leveraging attention, stuff like that. Knowing how to build attention, all that stuff like that. That's common sense, right? That's like street smarts. That's networking. That's going out and learning things that aren't taught in school, where business schools are the square, right? Using leverage and learning these other things that we do to be successful, where these other guys got to the top, right? What that is just going out and networking and using and learning the street part of business. If you understand the analogy.
I do. I mean, the way that I think of it as you're explaining this to me is I'm thinking like the theory versus the practice, right? So when you go to any school, they teach you the theory of that craft, right? Whether it be art, medicine, business, they teach you the theories. And then as you're practicing, you find that those theories are correct, but not all circumstances fit them. Right. So then you have to do what we call practice and figure it out as you're going through it. And also, there are fields such as business that evolve for different reasons, right? Sure. I mean, really, I can't think of one thing that doesn't evolve as we're sitting here. Like even
they have to evolve.
Right. Even if you're an artist, you will evolve in your craft just because of different techniques, different wants. So when you're thinking about this, it's like what you're saying makes sense, because if you are studying something, you're studying up until that point. But then as you grow in your career, the next 20 years, things would have changed. Yep. And you would have had to evolve with that. And you are hopefully part of that next generation's understanding and learning. And that's what I like to think of as generational wealth. It's not just the money and the assets. It's also that knowledge that you get to share back with your children, with your family, with your friends,
Yep.
and really giving that knowledge.
I hate the people who are successful or they are doing something well. Like, oh, I'm not going to tell you. But what? Like, why? Why would you not want to make other people successful?
Right.
Because essentially what you're doing is you're bettering the economy. You're bettering America. You know what I'm saying? If you have a way, I mean, there's obviously a way that you did it, right? You could tell them the basics of it and let them figure it out. But there's no reason to keep everything secret. We should want all businesses to thrive. I believe, like, for example, I believe every business can get funded. I know it.
Right.
And that sometimes people think that's my downfall, right? But I don't give a fuck. I believe every business is fundable. It's just a path from point A to point B and how you get there, right? What you have to do, every business is different, right? So if you're not willing to share your success, then what you're doing is you are not allowing other people to grow and be successful. And this is why we have these problems with other businesses failing and stuff like that.
But also, like, if you think of it this way, like, we can win as a team, right?
Yep.
Like, let's say that you have a friend that is a great marketer or a great IT person. Or even great at what we do. There's absolutely no reason why you can't share that information, because they may do it as something different you haven't thought of, and you guys can collaborate. Like, I really believe in these like whiteboard meetings I talk about all the time. It's really having this like brainstorming session and really getting the juices flowing. I think that creativity is when I'm most creative, is when I'm around people that I respect and that I feel like we can work together to accomplish something, even if we're not doing it for the same common goal. We're doing it for our own purposes. I think that I don't know. I see a lot of people that do that really well. And then I see people that sort of, what is that word? Well, they hold the information back. Yeah. And I feel like those are the people that don't really succeed.
They don't. I mean, something gets them in the end.